Hey guys, it's Carter. Welcome back to the channel. Hope you guys are all having a great and amazing day today. We have an awesome episode planned. We're going to be talking about the one and only Meta. Ticker symbol META. This is also known as Meta, also known as Facebook, the Mark Zuckerberg's baby. We're going to be breaking down this company. A lot of people have been asking me and saying, Carter, can this stock hit $1,000 per share? So that's what we're going to be covering. So I hope you guys all enjoy it. We're going to be getting in deep with Meta stock. So I hope you guys enjoy it. Now, if you guys want to learn more about investing, money management, all that good stuff, I got you. We have a blog. This is a new thing. We just started it this week. We talk about side hustles, money management, stocks, everything. Make sure you guys check that out. And if you guys are even cooler, don't forget to check out my merch. We just dropped a new merch line. Have t-shirts, hats, hoodies, everything. Check that out. Link is down in the description. So now let's jump into it. I hope you guys enjoy it. So I think we all know what Meta is. Meta is also known as Facebook, which is probably the largest social media platform that's ever been created. And what we've seen over the past year in general is just extreme sell-off from this stock. The stock was trading for $385 a share. And then in a matter of a year, the stock was trading all the way down to $135, losing more than half of its net worth. And a lot of people have been freaking out, buying these dips, and the dips just keep on getting lower. So now that we kind of understand what Facebook or Meta is, I want to break down the pros and the cons of Meta stock. So let's start with the cons, because normally we start with the pros and I want to change it up. So some of the issues that Meta or Facebook has really seen over the past year is they've seen a decrease in daily active users on Facebook. Facebook makes up more than 80% of Meta's revenue. So anytime you have, missed daily users, that means missed, advertisements. And what that generally means is sell off from investors. Why does investors want to hold, Meta or Facebook when they're missing their daily active users goals? Not to mention, in the past year, online advertising has been absolutely obliterated. What we've seen from Meta and also Google is advertisers are not willing to pay as much right now. And I just think that the general market we're in right now, with high inflation, high interest rates, and this could be another reason why we've seen sell-off, is just the general S&P is selling off as well. All right, the second issue that Meta has is absolute terrible fundamentals. They've missed earnings, they've missed revenue, missed earnings per share, and their net profit margin is falling well over 15%, which is never a good sign. Net profit margin is one of the most important things when evaluating a company. This is pretty much all the money they actually take home. And this has fallen more than 15%, so it doesn't come to a surprise why all the other fundamentals are down as well. So the third con is they're using all of their profits, all of their leftover profits, and investing into the metaverse. And this is what we've seen. Mark Zuckerberg said it himself. He could easily use those funds, those profits, to invest in things that are working well, like advertising, WhatsApp, and stuff like that. But what they're actually doing is taking billions, yes, billions with a B, and investing it into the metaverse, because he believes, he hopes that the metaverse is going to be the next social platform, which is crazy. And the thing about it is he could easily be right, but he also could easily be wrong. It's who knows, right? Who knows? I understand that there is probably a market for it, but I just think he's looking so far in the future that realistically, in the next year to 2 years, there's not probably going to be as much with the metaverse. All right, the fourth and final con that Meta has is they've laid off over 11,000 employees. Anytime you have layoff, it's not a great thing for the company. One, that means they're kind of struggling and they need to kind of cut the corners, and kind of take as much profit as they can. So, that is never a good thing, but it's overall, they could be doing some reworkings of the numbers. I just think a lot of it has to do with the general market conditions we're in with high inflation and high interest rates. All right, now that we talked about all the cons, make sure you guys hit that like button and subscribe. Do it right now before we get into the pros. Do it right now. All right, cool. Starting off with Meta's pros, they're obviously the leader of the social media game. They've been around for almost the largest, and they bring in billions of daily active users. Yes, TikTok and all those other, they bring in millions. They bring in billions with the B, daily active users, which is unheard of, and they make money off of advertising, so you know it's like printing money for them. Number 2 is they're investing billions into the metaverse, which yes, I did put it in the cons, but let me explain why this could be a pro as well. It's like I mentioned, he could easily be right about the metaverse. He could be right or he could be wrong, and he's just spending money right now and creating these products. He's creating the Quest 2, he's the owner of Oculus, and then just investing billions into this software that is actually awesome, you know, creating these workplace platforms that are super cool. So I definitely think that this is awesome, and honestly a really strong thing that Meta could be right about. All right, the third pro is, yes, the stock has sold off so much, and this could be a massive for sale sign for people to buy at very, very affordable prices. I understand the stock could easily sell off more, but high risk, high reward play for sure, you know, and you'll never see an opportunity like this. It's like buying the stock a couple years ago. So for me, you know, that is always a pro, because you never want to buy when things are at all-time highs. You want to buy when things are at lows. All right, so the fourth pro for Facebook, Meta, whatever you want to call it, is they may have been doing not the greatest on their fundamentals, but you can't argue with $40 billion in cash with only $6 billion in debt. I know, you can say whatever you want in the comments about the revenue and the net profit margin, but $40 billion sitting in cash in a bank, only $9 billion in debt, you know, that's a pro. That's a pro. That's a lot of money. And they can use that to invest into products, invest into software, invest into their people, and grow the company larger. So the last pro is the analyst price targets range. They range from anywhere near and around $147 all the way up to $260. So for me, you know, these are giving returns of anywhere from about 9% all the way to about 30%. So I think that's a pro, because that's an increase, and some analysts think other stocks will go down. So I think that's good. So now for me, what do I think Meta is going to do? So for me, you know, should you invest? I think that Meta, for me, high risk, high reward play. If you're investing into Meta to get rich quick, don't invest. If you're investing for 2 to 5, 10 years out, then right now could be a good opportunity to buy into a company that is, you know, pretty much developing fantastic products into the metaverse. And yes, they've gotten sell-off. Yes, they've gotten, you know, not the greatest fundamentals, missed revenue and all of that. I completely understand, but they're using all of their leftover profits, and instead of investing into things that are working well, you know, like Facebook ads and like WhatsApp and all of their other, you know, companies that they own, what they're doing is they're taking this cash and they're investing it into the future. And I think that's the biggest thing. You know, they're taking this money, and instead of investing into things that work, they're investing into the unknown. And I love those type of investments. And I understand I could be wrong. And that's why I wouldn't recommend, you know, the average investor invest into this. But if you're gonna do it, the strategy is dollar cost average, invest on a weekly basis, get a good average price for those shares. So if the stock continues to sell off, you're just averaging down that price. So once it recovers, you make a lot of money, okay? On the flip side, keep it under 1% of your portfolio. For every $100 you have invested into other stocks, assets, bonds, stuff like that, only put $1 into Meta. And the reason why is, one, if this thing starts squeezing up, you can always buy more shares. It took, you know, Apple, Amazon, Google decades to become these massive companies. Meta, gotten sell-off, it's gonna take a long time to recover, right? So you always can buy more, you know, once you see this stock outperforming other stocks or indexes. So that's another good thing. And if this thing tanks down, you're only out 1% of your portfolio size, so it's a good way to minimize risk, still have some shares, and have a strategy for Meta or Facebook. So guys, I hope you guys enjoyed this stock, not the stock, I hope you guys enjoyed the video. If you guys did, hit the like button, subscribe, don't forget to check out my merch, and we'll see you guys later. Remember to stay happy, guys, stay positive, and I hope you guys have a great rest of your day, and we'll see you guys later. Take care.